quiet session on the street after a midweek holiday with the Nifty closing the month and the week largely flat in intraday trade. The small cap index is seeing some outperformance while other benchmarks lag. IT is the leader amid AI optimism and Wipro's new partnership announcement. Realty lends support while most other sectors lag.
Fails to secure shareholder approval for its proposed transition to an Indian-owned and controlled company. The move was aimed at giving Instamart greater flexibility under inventory-led quick commerce models, but concerns over increased founder and management influence weighed heavy on the vote.
Stocks under pressure after disappointing earnings. Bharat Dynamics reported a sharp drop in revenue and profit amid execution delays, while Bata India saw profitability hit by margin pressure for its losses and VRS costs. Avanti Feeds also declined as weaker margins offset revenue growth.
On the other hand, GMR Airports swung to profit on robust passenger traffic and operating leverage, while LG Equipments reported healthy growth in revenue and profit despite weak demand in Europe and Australia. Alchem Laboratories advances in trade after brokerages highlighted strong domestic and US business momentum.
Asian Paints is expected to report a stronger Q4 led by recovery in decorative paint demand and improved volume growth. Margins are likely to expand on operating leverage, lower base effects and recent price hikes aiding channel sales momentum.
Interglobe Aviation is expected to report weak Q4 with profits likely slipping into the red as yields and passenger load factors come under pressure. Investors will closely track the airline's international expansion strategy and network additions amid the West Asian crisis.
Auto sales are expected to remain strong in May with passenger vehicles and two-wheelers likely to post double-digit growth driven by improved profitability. New launches and healthy financing availability tractor demand remains supported by rural liquidity, while commercial vehicle growth is expected to moderate amid higher fuel prices and freight-related uncertainties.
Those are all the top headlines that we are tracking this morning. But first up, let's put the spotlight on Ramki Infrastructure. This counter reported mixed set of numbers for the fourth quarter. Revenue saw an uptick of nearly 4% on a year-on-year basis, but on the bottom line, company has reported a profit of 43 crore this time around versus a loss of 13 crore that the company reported same time last year. So what led to this and what's the outlook going forward? To understand that, we are now joined by the Chief Executive Officer of Ramki Infrastructure, Mr. Sunil Nair, who is now joining us. Mr. Nair, morning and apologies for keeping you waiting. First up, if you can take us through what fourth quarter looked like for you and what the outlook is for FY27.
Good morning. Thanks for having me on. FY26 has been a year of resilient performance, strategic progress, and a balance sheet strengthening for Ramki Infrastructure. The consolidated PAT up by 40% year on year, that's from 202 crores to 283, and standalone PAT grew by 27%, which is 331 crores to 266 crores. It's been a disciplined, strong execution capabilities, and the financial discipline in the execution is showing visible results.
All right. So now at the end of the quarter, you had targeted almost 2,400 crore for revenue for FY26 now, which has come in at almost 1,850 crores. Could you explain what led to the misses?
There are quite a number of new orders are picking up momentum right now. The last quarter, there are delayed decisions from our clients as, it's been spilled over to the next year. So as we see going forward, we have an order book of 13,000 crores. So that would be coming in the next two financial years.
Understood. So that's as far as the order book position is concerned. But what is the bid pipeline looking like at this point in time, which could potentially translate into higher order wins for the company?
Our bid pipeline is pretty strong, both domestically and internationally. Today, if you look at domestically, we are working on all of the sectors where There are some places we have been placed as L1, and there are places in the international market our bids are going in. So we see 14,000 crore bid pipeline in the coming 6 months.
All right, let's talk about segment-wise performance: industrial, water, wastewater, and buildings. What's the current status?
All of these sectors are performing well. On the water, wastewater, our recent win with Hyderabad, the Water Wastewater Authority, it is HMW SSP, which is around 2,100 crore. On the industrial sector, we have won one of the BOT project with MIDC together. And on the MITL side, we have won an industrial park, which is about 1,300 crores. So if you look at the performance, I mean, all of these sectors are performing very, very well.
So that's as far as the order inflow is concerned and the segment-wise performance is concerned. But now that your order book position is very strong, Mr. Nair, can you give some guidance on where the revenue could stand in FY27?
Generally, we don't give guidance on the numbers, but I can confidently tell you that the numbers are going to be substantially higher in the 26, 27.
All right, Mr. Nair, could we also know about your international strategy, expansion strategy? What's the current status? What geographies are we talking about? And also, what are red flags which have got this entire expansion plan, maybe a slight delay over there?
No, on the international expansion, we are in Middle East. Predominantly, our water wastewater business and industrial parks are chasing quite a number of opportunities in the Middle East, be it is Oman, be it is UAE, be it is Saudi Arabia. We are bidding for many jobs. We are in the final round of discussions with clients on many jobs. On the industrial parks, we are talking to many countries in Africa and the Middle East as well. So our interest in the Middle East are still quite strong, and we hope to have a breakthrough in the coming year.
Briefly spoke about the water segment. How has the demand for this segment been in the domestic market, and has government tendering been on the higher side as compared to what it was earlier?
See, we are working strategically on the water wastewater side today with all the states in India. Be it is circularity, be it is a tertiary treatment, be it is 24/7 water schemes. There are a number of opportunities that we are chasing. These are in different, the tendering models are different. We are working closely with the state to conceptualize these projects. So we're hopeful that we will have a major breakthrough in these things. And obviously, we do a lot of work on the water transmission side as well.
You had indicated strong intent to begin dividend payouts in coming years. Would you stick by your stance?
Yes, we have. The board has recommended this year the dividend after 14 years, and then we have a dividend policy going year on year from here, and we see that that's going to be, it's being evaluated currently by the board.
Understood. So as far as the dividend policy is concerned, Mr. Nair, thank you so much for taking your time out and joining us here on ET Now and sharing your thoughts on what FY27 for the company could look like. And clearly the outlook is very positive, where the management is saying that FY27 on a directional basis will definitely be much better than FY26. That's the word coming in. But up next, an exclusive roundup of the week's key developments from the state of Maharashtra in Maharashtra 360.
Welcome back. You're watching Buy Now, Sell Now, and time to talk about Ashiana Housing. Good set of numbers reported. Strong collections have definitely aided the revenue growth. New launches are also there in the top line that has boosted the top line numbers, and senior living projects are an emerging opportunity for the company. But then let's dive deeper. We are joined by Mr. Varun Gupta, whole-time director, Ashiana Housing. Varun, hi, welcome to the show. Good and strong set of numbers reported in Q4 FY26. Revenue grew by 48%. EBITDA also saw a strong up move there. What are the key drivers behind this growth, and what is top line outlook for FY27?
So the top line growth was driven by projects coming up for delivery. These were projects which we had sold a couple of years ago, and growth has happened in terms of sales and construction that got reflected in this year in terms of increased deliveries. Next year, we expect to see further top line growth to close to 2,000 crores of top line from a little above 1,000 crores this year. This is also backed on expected increase in deliveries. We have mentioned the projects we expect to deliver in our annual deck if people want to see where that revenue is coming from.
Right. Mr. Gupta, you also reported strong pre-sales and collections growth in FY26. Can you take us through what major launches were lined up in FY26 that drove a strong pre-sales growth, and what is the pre-sales and collections guidance now for the year ahead, FY27?
So in FY26, the pre-sales growth was driven by two things. One, we launched a project called Ashiana Aroham in Gurgaon, and that was in the Q4, and that made up the bulk of the value of area booked in Q4, and that led to growth. And other than that, I think there has been growth in our senior living business. Our senior living business hit 570 crores, nearly a little bit lesser than that for the year of FY27 in terms of pre-sales. Increasing from, I think, 370 odd crores in FY25. And in FY27, our guidance remains for 2,200 crores of pre-sales in FY27. However, we expect the senior living contribution to increase, and we are targeting over 700 crores of pre-sales in the senior living business. And we're shifting more and more of our focus towards that aspect of the business.
All right. What are the major upcoming launches and GDVs?
So we have 6 projects to launch over the next, let's say, 24 months. And these are projects of 5 senior living projects and 1 premium housing project in Jaipur. These projects put together have a GDV of about 7,500 crores. And of this, we target to launch 3 projects within this year and 3 projects in the next financial year.
And Mr. Gupta, what is the revenue mix that you are now targeting going forward between mid-income, senior living and kid-centric living going forward? What will the mix look like?
So going forward, we are targeting senior living to contribute more and more of our business. Senior living is hovering around 20 to 25% of our business. Over the next 3 to 5 years, we aim to make senior living more than 50% of our business as we go forward. And accordingly, also the lands that we have acquired, as I said, of the 6 projects that we plan to launch over the next 24 months, 3 of them are senior living and 5 of them are senior living, and only 1 is in the premium housing space, which is reflecting our commitment more and more towards senior living.
Senior living projects are gaining traction across cities like Chennai, Pune and Jaipur. Which geographies are currently seeing the strongest consumer demand and pricing power?
So currently our senior living business is concentrated in 3 regions, which is NCR, the Mumbai-Pune region near Pune, and in Chennai. Chennai is the largest senior living market for us at this point of time in volumes and value. We expect the Bombay-Pune region to become also a really big center for us, and we have added more parcels there. And Bangalore as a new market, we have also added for senior living. We hope to launch the Bangalore project in the next financial year.
And Mr. Gupta, construction costs and labor availability continue to remain a concern in India. How is Ashiana managing execution efficiency and protecting margins in the current environment given the shortage that we are facing?
So one thing that on the margins, fortunately, we had a good price increase in the projects that we have sold over the last 3-4 years. And I think there is ample room to ensure that the margins are protected in the future projects, even though costs will go up. Uh, so more than costs, I think we are a little bit more concerned on delivery schedules, because the material availability more than price. Also, the delivery timelines have gotten disturbed over the last 2-3 months. The delivery timelines of materials have started recovering, and we hope to see material availability increase on that front. And on labor availability, we are increasing our focus on labor welfare, improving their living conditions, improving their working conditions to become a more attractive organization for workers to come work for us, and we get a larger share of the workforce that is available in the country at this point.
All right. Also, because of rising inflation, LPG issue, and elections in some states, there is a labor shortage. What's the situation now, and how are you looking at the situation currently?
There is a labor shortage in parts of the country, and but we think these issues are more temporary in nature, and labor issues are getting resolved every day. I think we should hit uh, peak workforce in the next 30 days.
Okay, so that's the outlook for FY27. Mr. Gupta, thank you so much for taking your time out and joining us here on ET Now and sharing your thoughts on what FY27 could look like for the company. But shifting focus from one corporate to another then, and we now have the management of Physics Wala now joining us. Co-founder of the company, Mr. Prateek Maheshwari, is now joining us. Mr. Maheshwari, morning, Ashesha this side. You've reported very strong set of numbers for the fourth quarter. Revenue is up 51%. We have losses that have narrowed substantially in the quarter gone by. In fact, EBITDA has jumped 3 times to about 300 crores. What led to this? What led to this kind of growth that you've reported, not only for the fourth quarter, but for FY26 as well?
So essentially, the higher enrollment rates, like 21% up in enrollment and 11% up in ARPU led to this growth. But our nature of the business is very predictable. We get to know the year trajectory in first 3-4 months of operations. Strong Q4 is a great indicator, because that's where the maximum collection happens in quarter one and quarter two respectively. So we will continue to show the same trajectory of growth this year as well. And if you see the overall education market opportunity, India has a 250 million learners. We are not even barely scratching the surface. We are just touching the 2% of the market at this point of time. So so market is very, very deep, and we are rightly positioned to capture it.
All right. So now with that commentary, 30% plus revenue growth for FY27, can this be counted as the growth drivers going ahead?
Yeah, so we are quite confident to deliver upwards of 30% growth in revenue and upwards of 100% growth in our EBITDA. Because initial admission trends of the year looks very strong. Couple of our new initiatives have done really well. For example, the state boards exam category is grew by 9x from FY25 to 26. In terms of Curious Junior, which is K8 segment, small cohort two-way communication platform, has grew by 4 times. So by seeing this trend, we are quite confident that we will grow revenue more than 30%, and EBITDA goes without saying by 100%.
30% revenue growth and 100% EBITDA growth. That's the figure that you're penciling in for FY27. And let's also talk about profitability. I did mention that profitability loss rather has narrowed this time around, and you're saying that you are looking to turn profitable on a full year basis in FY27. Is this a conservative guidance, and do you see any risks in achieving this profitability guidance in FY27?
No, we are fully confident that we will achieve full year profitability in FY27. That would be the easiest target to achieve FY27. More importantly, we have entered into southern market, have shown 100% collection, almost 100% collection growth in that market as well. So the southern market strategy is also shaping up quite well. With the current set of tractions, we are very confident that we will achieve PAT profitability quite easily. and upcoming years will have the similar growth trajectory in upcoming years as well.
All right. Management highlighted strong traction in state boards, almost 10x revenue growth. Now, is this segment likely to be a big contributor for revenue growth for you going ahead?
Both good contribution in terms of revenue as well as enrollment. But if you see grade 9 to 12th, India has more around 60 million learners, 6 crore learners. And we are barely scratching the surface at this point of time in this market. We are not just the market leader, but we are a category creator also for in this market. Along with that, we have spotted couple of white spaces in the market in terms of AI-led skilling. So we have launched a category of courses. We are calling it earners, where we make learners to earn something. So we are calling it earners, and 100,000 students have enrolled in just 1 month of its launch, and more than 10 crores of cash collection have already been done in this category specific. So continue to launch the newer segments, and committed to become lifelong learning partner for the kids.
You've also said that your offline business is likely to become fully profitable in FY27. What makes you so confident? And for the benefit of our viewers, what is your offline versus online mix at this point in time? And how is that expected to change going forward?
Hmm. So our online revenue is 51 percent in totality. Offline is 45-46%, and remaining is other income. So majority is online revenue. Online growth rates are much faster than offline growth rate. Online we grew at a 39%, and offline we grew at 31% from FY25 to 26. The similar trajectory will follow, that online will grow at a much faster rate. In terms of offline profitability, we were at a minus 19% in FY25. This year, FY26, we have brought it down to minus 10%, a 9% delta. And next year, at a group level, we will become profitable in offline, is what we are aiming. And we are quite confident that, because the growth is coming from the same centers as well as expansion into newer cities and the newer centers. The nature of the business is the first 3-4 months you get to see the admission trend for the entire year, and students pays you the fees upfront. So it's a negative working capital cycle business, and the current admission trends gives us full confidence to achieve near break even numbers in our offline vertical, which we started 3 years back. 60% of our Vidyapeeth centers are already generating profit. So, it takes 2 to 3 years to for a center to break even and start generating cash. So, and that trajectory is shaping up quite well.
But then over here, paid users and online transacting users continue to grow strongly, while ARPU also improved due to premium offerings. How are you balancing the affordability with the premiumization, and what is the long-term ARPU outlook now?
Yep. So we have improved our ARPUs by 11% in the similar guidances we are giving to the market for upcoming year. But we stand for affordability and inclusion in education. So the base batch, where the entire live learning, doubt solving, assignments, revision, mentorship is happening, that base batch price remains the same, but we have added value-added services on top of it, which is optional in nature. So more and more students are opting for value-added offerings, and we have introduced Power Batch, Curious Junior, couple of premium offerings. Those who can afford, who want higher level of personalization in terms of one-to-one doubt solving, students opt for premium offerings. So with the higher attachment rates in future, we will continue to improve our ARPU. See, our annual ARPU is less than 4,000 rupees. It comes at a 10 rupees per day price. So we have made education more affordable than data in India. So there is a huge headroom for the scope of improvement in ARPU, but we are very cautious that the vision and the mission of the company is to provide highest quality education at a most affordable price. So this value-added services strategy is shaping up quite well.
Right, so that's as far as your outlook on the average revenue per user is concerned, and you're looking to increase that further. But Mr. Maheshwari, before we let you go, one last question on AI. How has life changed for you because of AI? One, on revenue front, and two, also on efficiency front. Is that aiding efficiency in terms of providing better services, in terms of better counseling to your customers?
Right. See, education is a direct impact area of AI. More than 100 million queries is being solved by AI. More than 2 million answer sheets is being evaluated within the company by using AI. Recently, we have launched our voice agent for doubt resolution. In just 1 month of operation, it has resolved more than 3 million students' doubt with the 93% satisfaction rate. So we are early adopters of AI. 2023, we have launched our AI Guru, then followed by AI Grader, AI Books. AI is coming out has a great opportunity in terms of increase in terms of student engagement levels, paid to paid conversions, as well as overall retention of the students. So far, we have launched AI within our hero product called Batch. But now, what we are preparing a AI tutor, which is a one-to-one Socratic AI tutor, which will help students to revise to excel in their exam, and this will be a transformative change. And the AI-led the revenues will factor in this year as well. So along with that, of course, there is efficiency play, but the current focus of the company is to use the tech bandwidth to create the most affordable AI tutor of the world. We have been investing in a small language models, created a small language model for STEM. We call it Aryabhatta, fine-tuned on 4 billion parameters. The next model is getting trained on 20 billion parameters, the Aryabhatta 2.0. So, and since we have this ample amount of students data, because we teach maximum number of students nationally, so daily 3.5 million kids comes on the application and generates billions of data point. That data is very precious. We are leveraging this data and this behavior to design AI tutor.
All right, I think with that, it's a wrap. Thank you so much for joining us today and speaking on the results. Thank you.
Thank you.
And with that, it's time for a short break, but post that, we'll be connecting with another management on Q4 results. Stay tuned.
Welcome back. You're still tuned into ET Now. Let's put the spotlight on Technocraft Industries. That counter reported strong set of numbers for the fourth quarter. Revenue has seen a marginal uptick, but margins expanded this time around, which aided EBITDA growth of about 26% on a year-on-year basis. What led to this kind of margin expansion that the company has reported? To understand that in greater detail, we're now joined by the CMD of the company, Sharat Kumar Saraf, who is now joining us. Mr. Saraf, morning. Thank you so much for taking your time out and joining us here on ET Now. And first up, let's talk about your fourth quarter results. And they've been exceptionally good, especially on margin front. What led to this, and what kind of efficiencies aided margins for the company?
Good morning, ma'am. As I had told you earlier during my last interaction with you, that we had put up a new aluminium extrusion plant in Sambhaji Nagar. That plant is now fully operational. So that has definitely helped in better margins as well as better top line also. As you have seen, there is a good top line growth because that plant has completely helped us. The second thing is textile also. We see a lot of turnaround because of our re-engineering and reworking of the entire textile division. So that has also shown good results. Overall, all our divisions have done well in spite of the tariffs and in spite of geopolitical situations because of the war and other things. All our divisions have done quite well.
Let's talk about the margins. Margins saw a significant expansion. Can you throw some light on the margin sustainability and outlook going forward?
Yes, margins are sustainable because the margins are coming from our new plant in Samajinagar, which is now fully operational. In fact, we may even expect some better efficiency in times to come because it will get more and more stabilized. So I see no reason. But secondly, the war in the Iran-US war almost over. So there again, there is a stability. So what we lost due to tariffs, that also is now back. So I think overall, there is no reason to be pessimistic on the results.
Understood. Also wanted your thoughts on the industrial and engineering segment. The company has mentioned that it is seeing some challenges in this segment due to massive AI adoption in the US market. What is leading to that, and is this likely to weigh heavy on your numbers going forward?
No, no. On the other hand, we are using AI ourselves, and our subsidiary company Technosoft is one of the most important users of developers of AI. So AI is going to help us in getting more margins, and we are quite experts, or let us say, quite well acquainted with AI, and that there is no problem of any adverse reaction because of AI.
All right. Now, with regards to the engineering segment, the company, all right, so definitely the AI segment is something that you are really looking at. But then what caused the Q4 Y-on-Y top line growth to plateau at almost 1.4%? Is this a result of volume contraction, pricing pressure, or a scale down of lower margin products?
No, there is no pressure from any side. In fact, there is a good, healthy growth. So I really do not understand what pressure you are talking of.
Right. So, also wanted your thoughts on the current capacity utilization at your Aurangabad facility. What utilization levels are expected by the end of FY27?
So at the moment, our Samajinagar aluminium extrusion plant is running at about 80% capacity utilization. So there is a room for improvement, which it will. We had a challenge because of the shortage of the gas. And at that point of time, we had a very serious issue of non-availability of gas. But now that's gone, and there is no problem anymore. So I think the future is going to be very bright even for our aluminium extrusion.
All right, sir. With that, it's a wrap. Thank you so much for being on the show and talking to us on the results today. Thank you.
Thank you. Thank you.
Okay, time to sign off on this edition of Buy Now, Sell Now. But you stay tuned. Short break, and post that will get you market segment.